Welcome back to World Crisis Radio. Therefore, we get the overall picture. The WikiLeaks unleashed Tunisia, the CIA unleashed Tantawi and Annan in Egypt for a military coup against Mubarak with the various golden youth gaggle in the square. And that has now been under cover of those events, I would really say, since this is not so spontaneous as they say. The CIA has now activated its assets in Libya among these disgruntled tribes, right? The word is that, Gaddafi gave up on those guys in northeastern Libya in the Benghazi, Tobruk area. He gave up on them a long time ago. So they had nothing to hope for. The Muslim Brotherhood is supposedly very strong. We're going to have a new parade of CIA officers coming out telling us how great the Muslim Brotherhood is and how they're no threat and they're not Al-Qaeda and all the rest of this stuff. Gaddafi says they are Al-Qaeda. An interesting dialogue. So, but this now unleashes this wave, something between 500,000 and 2 million refugees coming out of North Africa. Isn't it interesting that instead of the singing tomorrows, democracy, freedom, and happy dawns, we're now getting chaos? And as I said this at the very beginning in the Russia Today interview, one alternative is chaos. Out of chaos, you can get the Muslim Brotherhood, or I think even more likely, a combination maybe of that and warlords. And let's remember again, Yunus al-Obaidi seems to be the warlord of northeast Libya. This looks like that old H.G. Wells one, the Shape of Things to Come, where the wars go on for so long that the nations break down and warlords emerge. But now, all the desperate people fleeing from this insane situation, where you can choose between Gaddafi, the Muslim Brotherhood, and the warlord al-Obaidi, this is now going to be a wave, right? Across the Mediterranean are coming the boat people of North Africa headed for Southern Europe. And this is going to be a huge problem. It's going to drive down the euro. It's going to be a burden on European budgets. It's going to lead to an exacerbation of the North-South divide. One interesting call in the German Bundestag, in the German parliament, a guy called Gerhard Klose called for a Marshall Plan for Africa, or at least a Marshall Plan for North Africa. I would make it a Marshall Plan for Africa in general. Maybe we can say something about this later on in the show. But that's of course what you should have done 20 or 30 years ago, and you can still do it. It's never too late. Some of these things are going to have to play out, but you can still do it. But this has got to be serious. This can't be gambling hotels and some little stuff like this. It's got to be heavy-duty infrastructure, heavy industry, modern technology, modern cities, modern transport, modern healthcare, modern housing, and essentially overcome the backwardness of these areas. Because the thing is, tribes exist in these rural, desolate areas, and if you build some modern cities and make those attractive, then the tribes essentially are dissolved into the cities, and that is much to be hoped for. I would expect now that there is already pressure on the UN Security Council to approve a U.S. NATO intervention into Libya. So isn't this interesting? We're going to have, in this case, Obama can take the passive stance. Obama can say, well, I don't really have anything to do with this. But the world is going to come to him and beg him that the U.S. is begged and pleaded with and implored to come and seize the Libyan oil wells. And then, of course, Obama can turn to Wall Street and say, see, look, I've destroyed all the protest movement inside the United States. I overthrew Mubarak for almost no money. I'm getting rid of Gaddafi for you. I'm going to give you the oil wells, and I don't have to have a war. Well, later on you will have a war, right? If you try to take those wells and hold them, you may have el-Obaidi coming after you. But for the moment, he can say, for the purposes of getting money for the next election, Obama can say, I give you all this stuff without all the money and the expense and the hatred and the isolation that the neocons have caused. Now, let's look at the other big destabilization aspect. The other big destabilization potential here is the oil price. Yes, indeed. Here we have the German news daily. This is pretty much the equivalent of the Wall Street Journal. It is Handelsblatt, trade paper. Handelsblatt, Germany's economics and finance paper. So headline in Handelsblatt of yesterday, Wednesday, fear of oil price shock. And I think the oil price yesterday was 101.32. This, I think, is North Sea Brent. This is North Sea Brent, North Sea oil, slightly over $100 a barrel. The oil price has now gone up $20 in 3 months. Now, this is obviously a partial attempted solution to the problem of saving the dollar. The more you drive the oil price up, the more demand for dollars you create. If you increase it by 1/5, then you've created that much extra demand. If you double it, you triple it, so on down the line, you get more and more demand. The dollar becomes more and more stable. Central banks are more and more likely to hold dollars under those conditions. So the dollar has been helped, and it's very clear there will be now a continuous rise in the oil price. This was implicit in Egypt. Egypt is an oil producer. Some of those were owned by Eni, the Italian state oil company. And now it's Libya. Libya is, I think, it's 3 million barrels a day, I think. It's not the biggest in terms of immediate production, but the reserves, the oil in the ground of Libya seems to be the second only to Saudi Arabia, at least in that part of the world. There's a lot of oil undeveloped, maybe undiscovered in Libya. So here's the breakdown. The reason that the U.S. can do this with relative impunity, and here we're referring to article in Die Welt of Hamburg on Thursday, today, the amount of oil going to different countries from Libya, that is to say, how much oil do these countries get in percentage terms of their total oil? Let's take, for example, the U.S. The U.S. only gets 1/2 of 1% of its total oil exports from Libya. It's not much. Could be replaced. 1/2 of 1% for the U.S. Now, at the other extreme, there are some other extremes. Italy gets 22%, almost 1/4 of its oil from Libya. Ireland gets 23% of its oil from Libya. Austria, 21% of its oil. Germany gets 8%. Great Britain, 9%. France, 16%. Spain, 12%. Greece, 15%. Holland, Netherlands, 2%. Not that much. Switzerland, 19%. Okay? And always interesting from the point of view of what the Anglo-Americans are up to. China, 3%. Now, 3% not a lot, but if you take away 3%, the price of the rest of it goes up quite a bit. Australia, 2%. Quite interesting. So you get the idea that Europe as a whole is in there with about 15 to 20% of the oil of Europe coming from Libya. So it's perfect for the CIA. It means that the U.S. is hardly going to be hit at all. You take away that 1/2 of 1% from the U.S., and that's really not so bad. But when you've got, above all, Germany 8%, but then you look at Italy 22%, France 16%, and a place like say Switzerland 19%. Anyway, there are enough countries that get a lot. It's 15 to 20%, say for Western Europe. That is significant, and that can be obviously it can be a physical economic disruption that the oil is simply not there, or it can be a price disruption. So great destabilization possibilities, great ways to attack world civilization for Wall Street and the CIA. Since they couldn't destroy the euro last year with the speculative method, they're coming back for a new attack on Europe, and it's taking the form of the destabilization of North Africa. Let's be looking at places like Algeria and Morocco. Maybe they will blow soon. CIA networks being mobilized all over. See you soon.